Hey, how's your Monday, guys?
Hey, hello everybody. Thank you, Scott. Hey, Steve, what's shaking over there?
Oh, it's a typical Monday, but it went by fast.
It is. It did fly by. Lots of stuff going on out there in the market today. So welcome everyone to the November 8th session of Office Hours. I'm Jamie Hodge. Got my wingman Steve Gomez in here as well. So before we get to the good stuff, just a quick legal jargon here with the disclaimer coming at you on a weekly basis. Is for educational purposes only, simply meaning we do not dispense, buy, and sell information, tell you what to do, when to do it, all that good stuff. If you do need that type of service, please seek out someone like a registered investment advisor, Series 7 licensed stockbroker, somebody who is legally licensed to dispense, buy, and sell information to you. So once again, all the content that we share with you guys in these webinars is for educational purposes only. Okay, moving right along here. Always like to take a little bit of time at the top of the hour. 400 or 500 people in there on any given day. Barry does a fantastic job at not only showcasing the way that he uses the technology that is TI Pro, but the way, his trading style. He'll also share with you his trading. Other than Barry, the next best thing about the trading room is it doesn't cost anything. Okay, so if you've shopped around the web, looked at different trading rooms, any room out there worth its salt, not only is it not going to be free, it's going to be pretty pricey. But this is one of the added benefits that we bring to the table when you become part of the TI community. As far as the 5 p.m. Eastern webinars, bi-weekly webinars, we have, of course, today office hours every other Monday. Steve's going to take the helm on every other Tuesday. Andy Linloff's going to ride shotgun with him. Every other Wednesday now we've got with the trading studio day, we have the support session, which is every Monday through Friday between 12 p.m. and 1 p.m. Eastern. This is conducted on our YouTube channel. And on the next slide here, I'll show you how to get there. Trade Age /live, that's a static. So just keep that in mind. Great resource. In addition to that, we've got a great 4-part video series, which we host on our YouTube channel. So if you just pop over to YouTube, find the Trade Ideas channel, do a little search for TI University, these things at your leisure. So if you have not watched them, do yourself a favor, get in there and do it. And here we are, today's agenda. But when we're in a toppy market like we are, sometimes that is the case. Also going to do the Holly recap. Holly didn't knock it out of the park today, but there were still some good trade arounds, a little bit of add-on action there, not a whole lot as far as we'll see shortly here. And of course, we've always got some nice opening range breaks to cover, and the sector CC container that I've handed out in the past couple of webinars. Very interesting today. So we'll look at what that thing divulged today on a certain sector. So Steve, if you're ready, I'll just go ahead and kick it on over to you, and we can look at the overall. You ready there, Steve?
Money that it takes to keep this gap down, this move up to the 50-day moving average, which remember is my general health of any market or any stock. And I said, I'm not really bullish last time. Actually, and that was all the bias. P500 said definitively, how far out on this branch can I go there? But all I can clearly say is these markets are above their moving averages. They're flying in clean air. Just be on the lookout for extended stocks, trading profits. At a given time, the market can do a little dipsy doodle correct. This much space in between our key moving averages there and there. Under $5, under $10 even. It's been a long year. If I go back in time here and do it correctly, you can see we've got about a 9 or 10 month range. That's way too far, Steve. Way too. There we go. So this is the, and then the sellers step in. But as you can see now, right on time, and again, seasonally, as we go into Black Friday, Thanksgiving weekend, even into the Christmas season, that's the holiday season where the market just kind of likes to grind higher, typically seasonally, given nothing bad happens. But the biggest benefactors of those, in my experience over the years during that season, is the small caps. So if you got your eye on a few small caps, I think you're coming into a pretty good seasonality. I would say again, there's a little bit of extension here I would like to see the IWM at least consolidate a little bit and let these moving averages start to pick up the bottom and hold them up. So when I see price action way far above that moving average, I get a little nervous and I tend to want to take profits on the things that I can take profits on. So there's no bear case out there. Don't fight the Fed. We're coming into a seasonality of small caps. Get your pencil sharpened for your favorite small caps, and away we go. That's it.
Very good stuff, Steve. Yeah, I'm still like, wow, the IWM broke out finally. It's still kind of hard to believe, but that is the case. All right, you should have eyes back on my desktop now.
Yes.
So let us just dive right into the holly. And we had quite a few signals today. So not exactly until the close, but of course now, get my pointer to work here. The exit reason is reserved for the conservative profit exit reason, okay? And as you can see here, we've got different things: profit save, time to exit, reduce risk, and stop hit. So there are 5 things that could close out the trade for the AI in conservative mode: profit target, stop loss, timed hold, and then what I like to refer to as the 2 audibles that the AI can call, whether it's in a winning or losing trade. That comes in the form of reduced risk and profit save. And of course, they're always going to be listed out right here. So typically, first and foremost, a lot of the times by the end of the day, we'll have a larger number in moderate profit than we do in a conservative profit, but not today. All right, we've got a few very small instances. MARA here, 33.63 versus 55. On the TDC, 38.50 versus 46.90. And although there is a spread there, it's not really worth going into a whole lot of detail about because the amount is so small. On other days, typically, you'll see much larger spread. But for today, as far as conservative versus moderate spread goes, there's really not a whole lot to showcase. Of course, I'm getting a little ahead of myself here. So what are the rules for moderate profit? And whereas there are 5 exit reasons for conservative, in moderate profit, all that's used is a stop loss, all right? So it either gets stopped out or it doesn't. If it doesn't get stopped out, it holds until very close to the close of the market. So once again, not a whole lot of spread here to cover, which leads, what about trade around? Trade around is typically reserved for when we see the AI get stopped out. Maybe that might be a good time to get long, okay? Since we only have one to look at here today, CHPT, this is textbook, okay? So here we have CHPT, we're looking at 5-minute candles here. You got the AI buy up here, and we got the sell down here. Now, notice this is perfectly down to the stop area. Now, here's the question. How did the stock react around the stop area? Well, we can clearly see here, it wicked down to it, and then boom, that was the low, off to the races from that point on. You know, myself, Steve, Andy, all of you sitting out there, this has happened before, probably countless times. You just get stopped out by a penny or two, and then boom, the thing turns and burns. So every time you see the AI get stopped out, it's probably a good idea to observe how the stock reacts around the stop area. Did it, as in this case, act as a level of support or a little trampoline action? And CHPT is a perfect example of that. And not only did we get a nice lift, we could also get a much better price than the AI down here. Even if you want to wait till that candle closes, make sure that the wick isn't revisited. But anywhere in this area right here would have been a great trade around, or some like to call it the second mouse gets the cheese, right? We're watching the AI get stopped out. We take advantage of it if the stock is acting accordingly at the pivot area or the stop loss area. Not only did this one make it back up to the original signal line, but we got a little bit more up top there. So plenty of time to figure out where to get out, maybe use a little risk management, get out a half, and keep the rest for break-even stop, which would have kept you in this one all day. So that is something that you need to keep your eyes on when you're observing the AI, is how did this thing react around the stop areas. Other than that, we don't have any other stop hits today. We've got some other smaller losers in aggressive and moderate, but no other stop outs today. All right, see the questions piling up there, Steve? Looks like you're knocking them out. Let me know if I need to revisit anything. And that only leaves us with one more topic on the AI to cover, add-ons. Sometimes once we see the original AI signal, the chart might present a nice time to tack on some additional shares or really leverage that trade. So TDC, where are you at? There we are. Okay. You know, I failed to mention earlier, all the values that you see here on my blotter, basically I'm risking $100 per trade, okay? So that's why the stop level down here was right about $100. Unfortunately, you don't see a whole lot of risk to reward ratio here in a one-to-one format. You know, if we're risking 100, make 110 on this one in conservative mode, maybe 4/10 or half R on these. So once again, just not that big of a day for the AI, but just wanted to make it clear that all the numbers that you see here are risking $100 per trade. So on the add-on for TDC, let me clear my drawings off there. All right, so interestingly enough, a late day signal in the TDC. All right, now note the little area that it had put in before, right? This little area here, it was broken. Come on down here, still pretty far away from the stop area, but the AI calling a buy signal right here, pretty late in the day, kind of meander along here, and then eventually eyes are on this level here. As we pop up through this level here, it's either going to get rejected or maybe go ahead and break through that level. In this case, it kept on going. So that would have been a great little place to tack on a few more shares, depending on how aggressive you might have been feeling for the day. And as we got this this little one, 5, 10, 15, 20-minute run up, you could have leveraged the trade as it broke that level prior resistance there. So not the greatest, but a decent little add-on opportunity in TDC. And the other one was in the MARA. This one I really like because it kind of jives with one of my favorite intraday patterns, which is the opening range break. All right. What do I mean by that? Well, let's see here. We'll put a initial low, which came on that opening 5-minute candle. And we were at highs on that little wick right there. And notice we got the buy signal right here. We meandered along for another 20, 25 minutes before we came back up here. Boom, broke that opening range. So this would have been a great place to add to the MAR trade. All right. So we got the statistical viability earlier from the AI. 20 minutes, 25 minutes later, we got the opening range break. Let's check the volume in MARA today. Not knocking it out of the park, but not too shabby either, finishing the day at 1.46 on the relative scale. So this would have been a great place to add to the initial trade from Holly, capitulating up here at the top. Of course, don't typically get out at the top, but had plenty of time above that add-on signal to get out for some nice profits in addition to the original AI signal as well. Other than that, everything else was pretty much just what you see right here. Not a whole lot to showcase. But as far as the opportunity that presents itself in real time that you can't necessarily see here on the blotter, that's about all we had today. All right, just checking out the questions here. Boom, Steve's already got that one too. So just moving right along here. Was there a question?
It's a unique question, but I don't really know the answer. What is it that triggers a circuit breaker? The percentage amount of move in a certain amount of time? Do you know what the numbers are?
You know, I could not tell you that off the top of my head.
Me either. Well, we'd have to look it up. But the question is how could I find those that are getting close to a circuit breaker? And my response was just figure out how many percentage points it has to move in a given amount of time. And if it was like 5 minutes and it moved more than say 20% in 5 minutes or 30%, then you could create that column on a top list and sort all those stocks and then monitor the ones that are just screaming in the last 5 minutes. So change in 5 minutes percentage and then sort that column is what you'd want to do to monitor those. That's probably the best example I got, David. 10% within 5 minutes. Okay, so do something that shows like maybe 7 or 8% minimum, and then you've got that window, and you can double click and sort that, make sure all the ones that are the highest are at the top in your 5-minute column, and then you can watch and see as they're getting close. So this one's probably getting ready to halt.
That is correct. Yeah, pretty simple actually, just installing that column and going, hey, if the magic number is 10%, once that thing's trucking on up into the 9, 9.5, 9.6, well then you should just be, sitting there with bated breath. Never really thought about that before, but if you were interested in them. Okay, so let's see, lost my train of thought here. Just trying to figure out what I want to do first. I tell you what, let's skip over the orbs. We'll do those last. Got a few classic ones here, just textbook, 3 longs, 1 short. But first, what I'd like to do here is revisit the sector list. Well, what I did last time is I created that container, right, with all of the sectors, but additionally added the compare count windows, all right, which is going to be kind of hard to see, but this is what that container looked like after the first 15 minutes. And since I can't zoom in on this, I've just got a screenshot that I'm going to wheel over here, and we can just look at it in a little bit more detail. Okay, so this is what the sector map with the attached compare counts looked like today after the first 15 minutes. Now, I also take a look at my large cap compare count window, which is this guy right here, just for overall, try to get a beat on overall market sentiment. And we had some pretty bullish counts today. Let's see. Overall for the stocks with a market cap of 4 billion and higher, we had a pretty beefy upside count to the tune of 62%. But of course, in a market, as Steve just pointed out, when we're getting a little too ahead of ourselves, a lot of the times, well, what typically is a good signal turns out not to be. Okay, so if we just kind of take a gander at the SPY here, and this would be the 15-minute mark right here, that candle right there, and we didn't really have a lot of upside movement, but a lot of the times, more times than not, that large cap CC window is a benefit. But since we're getting kind of extended up here, it just fired and missed today, and those things happen. Nothing works all the time. But using the same theory here and watching a compare count window for each sector, you can see the ones that I've highlighted in green or yellow here. Let me just see if I can expand this too far. Just trying to get it a little bit more legible. Okay, so these are the 3 sectors that we're going to focus on today. Up here we've got technology, financials, and energy. Now, first let's take a peek at these 2 right here. Energy and financials, okay? So at first glance, after the first 15 minutes, you're like, oh my goodness, we got an 88% bullish bias in that in financials, and we have an 89% bullish bias in energy, okay? So what I've done here is these are the respective sector top list. We got energy right here. Here's energy, here's financials, okay? So if we just kind of leisurely peruse this list right here, all right, just by happenstance, the first one, HES, okay? And keeping in mind that I'm taking these readings after the first 15 minutes, which, there we go. Look what HES did. It just kept on cruising up for a nice little spell, all right? In other words, HES was more of a lagger than the other ones that we'll take a peek at here, all right? And remember, this was an 89% bullish bias. So we had HES, then we had Oxy, looking at the 15-minute candle right here, a little bit of a lift, okay? But look what happened the rest of the day. And if I just kind of scroll through these, you're going to see very similar action. These stocks were all running in tandem with that action. So you had a little bit of time to get in on an intraday basis, but if you didn't take that money, eventually it was all going to go away and you would go negative, assuming you weren't using proper risk management. Schlumberger, you can see that most of these were running with the group, okay? But you're always going to have some laggers, Okay, so keep that in mind when you see those really high compare counts. When you get up into the 70s, the 80s, and 90s on these sectors, look for the laggers. Don't just try to jump into everything that's coming through there. All right. But the bottom line is there wasn't a whole lot of, if you were quick on the draw, yeah, you could have been up a little bit. But then once again, I like to use the rocket analogy. If SpaceX or what's Bezos, something Blue Horizon or whatever, they have to calculate very precisely the lift, the amount of fuel, because they burn the fuel up too quickly, don't get into orbit, that thing's going to come crashing back down to terra firma, right? Kind of reminds me of a lot of these stocks coming through the energy sector today. All right, nice little lifts. After the 15-minute mark, you did have a little room, but if you were looking to hold these things all day, even though they might look good on the daily, they just didn't have enough fuel to get out into orbit. Let's take a look at the financials, which once again, right up here, well, there we go, financials, 88%. And on the financials, a few more laggers, okay? First 15 minutes on these guys, we had AON, looking right there. Nice opportunity, nice little lagger among the group, okay? Citigroup, kind of running with the pack, not a whole lot of opportunity there, all right? So MMC, nice little lagger opportunity, 5, 10, 15. We're in this candle right here, boom, boom, boom. It wasn't running with the herd, right? BlackRock, of course, this was a little bit pricey of a stock, but it's the action that we're paying attention to here. This little grouping of candles here, 15 minutes right here, you get a nice lift and it held up. But if we backtrack on some of these other ones, you're going to see they behaved very similar to what we saw in the energy sector, all right? They spent all their fuel very quickly, couldn't maintain those levels, started coming back down to earth. So in the financials, or as we kind of go back here to the energy, we only had one lagger that was identifiable and potentially playable. In the financials, we had AON, MMC, and BLK. But if we look at a lot of the other ones here, just couldn't maintain, miscalculated the fuel usage, and they all came back down. Now, it's kind of like the Goldilocks and the Three Bears story, right? This porridge is too hot, this porridge is too cold. What we want to do is find the porridge that might be just right, okay? And that's why I want you to focus here on the technology sector. So we had really nice bullish counts, not up in the 80s, not up in the 90s, but it looks like they got the fuel consumption just right on this little rocket right here, okay? And typically, when I'm looking at my large cap compare count window, anything above 60, that gets my attention, 60, 65, 70, but the things, I should say, whether it's the overall market ETF or individual stocks, tend to all behave the same way based on these readings a lot of the time. Never all the time, but a lot of the time. So looking at this compare count where we had decent buying in the first 15 minutes, but potentially not spending all of its fuel so that it might make it through that atmosphere, pop up into space, continue along on its little voyage there. Now, here we have the technology sector, okay? So, AMD, this thing has just been on fire as of late, but look at how beautiful the setup was here. There's the 15-minute mark. Anywhere in this area right here was pretty much golden, plenty of time to react, and you can see how AMD held up. What about Xilinx? 5, 10, 15, didn't exactly tag the bottom area right there. Beautiful little setup. Even if you did just jump right in the 15-minute level there, what are we at? $200. not even a full point on a $200 stock before it finally, you know, lit the afterburners and got up into this level here. What about this guy, FTNT? Okay, 5, 10, and 15. Once again, boom. Don't have to tell you about NVIDIA, probably one of the less pretty charts of the day. 15-minute mark being right here, taking a little excursion, but then finishing higher, finishing strong on the day. And we could just keep going through this list, and you're gonna see some really nice setups because there was, you know, an above 50 bias on the bullish count. But once you start getting up into that 60 level, from what I've, you know, deduced since I created this layout, it seems to be the 60 to 70 range, okay? And the higher you get, the more you could expect things to behave like what we just saw in the energy and the financial sectors. When you get just enough of a bias, 60, 65%, you start to see the things moving sideways after that first 15 minutes. A lot of the times, of course, you're going to get some nice action. Now, of course, they can't all be really beautiful, okay? But QRVO throwing a little elbow there, but still performing quite nicely. And you're just going to see this over and over again. First 15 minutes right here. You know, Steve likes to watch the 10 period, which is the green line on the 15-minute. But I've noticed a lot of the times in the 5-minute candle chart, it works the same as well. Another one from SWKS. So we could just keep going through here. And a lot of these are going to look very similar. JKHY. So what have we looked at here? 1, 2, 3, 4, 5, 6, 7, 8, 9. Let's just go ahead and make it 10. So 8 out of 10 are pretty pristine, okay? MU throwing some wiggles there, a couple of the other ones. But overall, as far as a leading indicator or an edge, the technology sector with that 65% bullish bias today was pretty darn useful, okay? And, you know, every day you never know what sector might be in play with these types of readings, but it's definitely worth watching, okay? So I'll make sure everybody has that layout again before we leave today. I'll drop that link in there along with the other windows that we're about to look at here for the opening range breaks as well. One second. Okay. Now let us move on to one of my favorite intraday patterns, the opening range breaks. Got 3 to look at here from the long side. Even got one on the short side today. There were a lot more on the short side, but VSAT was just so textbook. I didn't want to leave it out. So here we go. And before I get into these, I just want to let everybody know these are the 2 windows that I use to find these guys, which are just modified high-low tickers, high-low momentum tickers. If you want to get specific, and just take a quick look at the settings here. Very simple, which is what I like. We got a new high because a stock cannot break its opening range unless it's hitting a new high. We've got a rather sparsely populated filter set here. This is really where it gets its oomph. Relative volume just has to be at 3 or higher. Got a little maximum price here. Got minimum volume today at 100,000 shares, which typically it's a lot more than that, but we just at least want to have 100,000 in there. So very active, especially since the IWM is doing what it's doing. We're getting a lot more action coming through these windows as of late, it seems. So CBAT, first on the list here, okay? Pardon me there, just inhaled a little bit of water, which is always fun. All right, so here we are looking at CBAT on the intraday 5-minute candles. Nice little buyer right off the bat in CBAT, a little bitty gap, buyer was in control. And then we get the classic consolidation pattern here on the short term. Buyers coming in, can't just market buy everything. Looks like they started up the slice and dice routine here. And then of course, right here, coinciding with the blue arrow, look at that nice little clean break outside of that range. It's as simple as that, right? Coming at, what do we have? $2.54. and this little thing lit the afterburners and topped out up here in the 350 area. So a little bit of consolidation after we put the trade on, but notice the orange line down here is the risk area. This little area right here is what I would call the risk. It's nice and small, but look how big the reward area is. Don't know exactly how many times that would fit in there, but it's quite a few. And that's what we want to look for in any trade, is a risk to reward ratio that is at least 1x, 2x, 3x. So the more the higher the number, the better. But low risk, high reward, and maybe even one little time to add to the position. Sometimes these things repeat over and over again. Nice little add here. I love it when things move up in this orderly fashion. If all stocks did this, well, it'd be a much different game. But you can see here, even after that original signal there, we get another one, we get another one, we even get another one late in the day. But, it just depends on how aggressive you want to be. If you're a new trader out there, you've always heard, well, you should add to your winners, cut your losers when you're supposed to, add to your winners. This is a great way to figure out how to add to your winners. If we get these little periods of consolidation followed by consecutive breaks, those are typically nice times to add to a position. So CBAT just knocking it out of the park today. And of course, volume isn't a guarantee, but it's always nice to have on our side. And look at that, CBAT 44.28. Of course, China and the EV stocks are, coming back in vogue. But regardless of that, all that really matters is the price action, and in this case, the volume, and just a very nice setup on the CBAT today. And cannabis coming back into the party as well. And keep in mind, these little range breaks come in all shapes and sizes. This one, let's flip back for a minute, nice little run up, and then we got the flagging action. Whereas CGC here, kind of a nice little intraday horseshoe pattern here, a little rounded horseshoe. Coming down here, put in our low, start to come back up here, and boom, right here about 1184, we get that nice clean break, and it was off to the races. So forgot to put my top line up here. Once again, just to illustrate, risk here, reward this area here. So not near as big of a risk to reward ratio as the CBAT, but still impressive nonetheless. Now you might be sitting there going, well, how does he arrive at that risk level? Okay, not including the entry bar, which is right here. I just count back 15 minutes. 1, 2, 3. Take the lowest point at the prior 15 minutes. That becomes risk. Simple as that. Very easy to ascertain that risk level. So it could probably fit that in there at least 2.5 times, maybe even 3. So good risk to reward ratio on CGC. Not near as a volume monster as the CBAT, but hey, 3.78 ending the day gets the job done. Now, once again, this little area up top here, and I'm just gonna grab this line and steal it. Somewhere right in here might have been a really good time to add to the position, right? Depending on how you want to play it, candle bodies, use the wick. If you're a purist, it's really just a personal preference. But CBAT presenting another good add-on example from 1260, could have plucked out maybe another 40, 50 cents there on the add-on on CGC. So once again, EVs, cannabis, and lastly here, Blink, another EV related stock. This one taking a little bit more time to materialize as it puts in this rounded bottom kind of that we see right here, a little saucer, kind of horseshoe or whatever kind of oval, bottom of an ellipse, whatever you want to call it, but just presenting a nice range break here. Where is my 15-minute risk here, not including the entry candle, 5, 10, 15. risk area right here, and reward area up top here. So a nice little breakout right about the 36.70, and this one capitulating, bumping its head up here at the $40 level. How was the volume? How did it finish today? Well, you can see right here, 13 on the relative scale, kicking out almost 18 million shares when the float is only 36.28 million. So a healthy little day in Blink, presenting a nice little opening range break, nice little rounded bottom. Not really any time to add to the position. I mean, if you really want to play the game, not really enough time there. But notice the little pullback forms the same type of, little bitty U here, big U here, but it's the same nonetheless. Little juice on the table up there from 38.81 to about 40.50-ish or so. So that's about it for the longs, although there were more than that. That's about all the time we have to showcase today, and I did save one for the short side. Really wasn't going to cover any today, but it was just second here. Sat, okay. The reverse that we saw, CBET, just a little period of buying followed by the consolidate, just the off here from the open most of the day. But hey, these patterns resolve at different times of the day. And this one coming at about 1:20 my time, which would have been about 2:20 Eastern time. Just a nice little clean break from this clearly obvious consolidation area. I mean, I didn't even bother marking off the risk here, but you can see it'd be right up here at the top of these little candles here. So a very tiny risk area. And compared to the risk, a nice juicy reward area. Holding this one all the way into the close would have benefited you greatly. But that signal coming around 58 bucks, closing the day, about 55.5, we could call it. So a nice 2.5 point move there from that original breakdown. And once again, how was the volume? In VSAT, 8.51 on the relative scale, kicking out 2.3 million shares. So once again, plenty more of those coming through the turbo breaks down. We just don't have time to get to them all. So what I'm going to do here, I will drop the link for both of these windows here, along with the compare count sector container window as well. Now, just a word to the wise on the sector container. All right, when you pull that thing up, it's going to be, well, I won't call it a memory hog. All right, but let me just illustrate it for you real quick here. The way I'd recommend you use this to avoid your system getting slow, once you pull this thing up, it'll populate, obviously. Sure is taking its time now. Okay, so obviously watch it for the first 15 minutes. What I typically do is take a screenshot, and that way I just close down the window here. Because if you leave this container open with all these compare counts and all these top lists, you will notice some slowdown or some lag in your system. So what I do is I just take a screenshot, then kill the window. Otherwise, you might get some performance issues. Now, if you have a brand new machine right out of the box, it's only a month old, you might not. But just keep that in mind. Now, let me drop those links in here. And boom, everybody should have all three links there in the chat panel. All right, Steve, any questions I need to circle back on, or are we good to go? All right, looks like we're good to go. All right, well, I want to thank everybody for popping in today. Scott's going to walk us out, let everybody know how you can save a little bit of money on a new subscription, or if you've already got.
All right, sounds good. Thank you, James. Let's see what slide we're in. Ebook for 15% off your first month or year of trade ideas or any upgrade. So grab that. Holly rocks. Go ahead and use that before it expires. Probably going to swap that out at the end of this month. And if you want to find Jamie on Twitter, go to QuantBot, @QuantBot. Steve Gomez is at TISDG. We've also got at Trade Ideas and a couple other handles that you'll find if you follow one or the others. Trade Ideas Pro is the Facebook handle, so find us on there and like us. And any questions, email us info@tradeideas.com. That goes to our help desk software. Gives you probably the best support you can get. And we're going to have the recording of this up later on tonight or tomorrow on our YouTube channel, but we will send you an email tomorrow from GoToWebinar with a link to the playlist where you can find it once it's available. So stay tuned for that. Thanks, Jamie. Thank you, Steve. Have a nice rest of your afternoon, everyone.
Thanks, Scott. Thank you, Steve, and thank all of you for attending. I hope everybody has a nice green day tomorrow. Bye-bye.
See you tomorrow or next time.